All right, listen carefully, because what I'm about to share with you could completely change the way you look at penny stocks in 2026. We are talking about 3 USA Entertainment penny stocks trading under $3 right now, 3 names that most people are ignoring, but smart money is watching very closely. And here's the crazy part. If even one of these plays out the way it could, we're not talking about 20% or 30% gains. We're talking about serious upside, 5 times, even 10 times potential if the right catalysts hit. These are not random stocks. These are 3 of my favorite entertainment penny stocks right now, and one of them, I promise you, I will surprise you. Most retail investors are sleeping on it. In this video, I'm going to break down exactly what these companies do, why they are undervalued, what the financials look like, what catalysts are coming in 2026, and why they could go parabolic if momentum builds. So make sure you watch this video completely. Do not skip. Because one detail, one catalyst, one turnaround story could be the difference between catching a 3x or missing a 10x. And one more thing, if you want my complete penny stock roadmap, the guide that shows step by step how to approach penny stocks smartly, manage risk, and find early runners, comment below. If this video gets 20 comments asking for it, I will drop the link in the description. Now before we go deeper, do me a quick favor, smash that like button. Let's aim for 500 likes on this video. If you enjoy serious penny stock breakdowns like this, subscribe to the channel right now and turn on the bell icon so you never miss an update. In penny stocks, timing is everything. Quick disclaimer, I am not a financial advisor. This is not financial advice. Please do your own research and due diligence before investing. Now let's get into it. Let's start with the first stock, AMC Entertainment. AMC is one of the most well-known names in the retail investing world. This company operates movie theaters across the United States and internationally. At one point, AMC became one of the biggest meme stocks in history, but today it is trading under $3, which officially puts it back into penny stock territory. Now here's where things get interesting. The movie theater industry was hit hard during the pandemic. Revenues collapsed, debt increased, investors panicked. But since then, the industry has been slowly recovering. Box office numbers have been improving. Major film studios are pushing more blockbuster releases again, and consumer behavior is shifting back toward outside entertainment experiences. AMC generates revenue from ticket sales, food and beverage sales, and premium formats like IMAX and Dolby Cinema. The margins on concessions are actually very strong. When attendance increases, profitability can improve fast. In terms of valuation, AMC's market cap is dramatically lower than it was during the meme peak. The company still carries significant debt, which is a risk, but they have been restructuring, raising capital, and working to strengthen liquidity. If revenue continues to recover and debt pressure reduces, even slightly, the stock could re-rate quickly. Here's the undervaluation angle. At under $3, AMC is priced as if the theater industry has no future. But if box office performance stabilizes and blockbuster cycles remain strong in 2026, sentiment alone could push this stock higher. Upcoming catalysts include strong movie release schedules, quarterly earnings improvements, potential debt restructuring progress, and any positive free cash flow announcements. If AMC shows even 1 or 2 strong quarters, retail momentum could return fast. And when AMC moves, it doesn't move slowly. Historically, this stock has shown the ability to go parabolic when volume spikes. Now let's move to stock number 2. Entravision Communications, ticker EVC. This one is quieter, not as flashy as AMC, but in many ways it may be more fundamentally stable. Entravision is a media and advertising company. They operate television and radio stations, and more importantly, they have expanded heavily into digital advertising. They work with major global platforms and focus strongly on multicultural and Hispanic markets in the United States and internationally. The digital advertising industry is massive. Billions of dollars are spent every year, and as traditional media declines, digital continues to grow. Entravision has positioned itself as a digital marketing solutions provider, partnering with large tech platforms to sell advertising in global markets. Now here's the undervaluation case. EVC trades under $3, but the company generates real revenue. This is not a pre-revenue startup. This is an operating media business. Market cap is relatively small compared to annual revenue numbers. That gap is what creates opportunity. The stock has been pressured in past years due to advertising market slowdowns and macroeconomic fears. But if digital ad spending increases again in 2026, especially with political advertising cycles and global marketing growth, revenue could rebound strongly. Financially, the company has shown the ability to produce meaningful revenue. If margins improve and cost control strengthens, profitability could return more consistently. Catalysts here include earnings growth, digital expansion updates, new platform partnerships, and stronger ad demand cycles. What makes EVC interesting is that it doesn't need hype to move. If fundamentals improve, institutions could quietly accumulate shares. And when small cap stocks get institutional attention, price moves can accelerate quickly. Now let's talk about the third stock, Dolphin Entertainment, ticker DLPN. This might be the surprise pick for many of you. Dolphin Entertainment is not a movie theater company. It is a marketing and entertainment publicity firm. They work behind the scenes in Hollywood. They provide marketing, branding, and publicity services for films, streaming shows, celebrities, and major entertainment projects. Think about it like this. Every time a movie launches, every time a streaming platform releases a show, there's a massive marketing machine behind it. Dolphin positions itself inside that machine. The company has been acquiring agencies and building a network of entertainment marketing services. That expansion strategy is key. Now let's look at why this could be undervalued. DLPN trades around the low single-digit range. Market cap is small, but the company operates in a growing industry. Content creation and streaming marketing. Streaming wars are still active. Studios are fighting for attention. Marketing budgets remain important. If Dolphin continues acquiring agencies and increasing revenue, the growth story could become much stronger. Financially, this is still a high-risk small-cap play. Profitability may not be consistent yet, but growth potential is what attracts investors here. Catalysts could include new client announcements, major film marketing campaigns, streaming partnerships, acquisition news, or strong earnings growth. Because the float is relatively small, if buying pressure increases, DLPN could move aggressively. Small floats plus positive news equals volatility. And volatility is where penny stock traders make serious returns, if managed correctly. Now let's step back and compare all three. AMC is the high volatility recovery play. If box office numbers surge and retail interest returns, it could spike fast. EVC is the revenue-backed digital advertising recovery story. If ad markets strengthen, this could steadily revalue higher. DLPN is the growth acquisition play inside the entertainment marketing world. If they execute properly, the upside could be significant. All three trade under $3. All three operate in the entertainment sector. All three have clear 2026 catalysts. And all three carry risk, which is why position sizing and research are critical. Remember, penny stocks are high risk, high reward. You never go all in. You manage exposure, you watch volume, you track earnings, you follow catalysts. But this is exactly where asymmetric opportunity exists. If even one of these companies delivers a turnaround, improves margins, reduces debt, lands major contracts, or surprises Wall Street with growth, the upside could be dramatic. And in this market, small caps can run hard when momentum shifts. So now I want to hear from you. Which of these three stocks is your favorite? AMC, EVC, or DLPN? Which one do you think has real 10x potential? Rank them in the comments from strongest to weakest. And again, if you want my complete penny stock roadmap, comment below. If we hit 20 comments asking for it, I'll drop the link in the description. Remember, I'm not a financial advisor. This is not financial advice. Always do your own research. If you found value in this breakdown, hit that like button, subscribe to the channel, turn on notifications, and follow me for more serious penny stock analysis. The market rewards the prepared. Stay smart, stay patient. And I'll see you in the next one.